All right. So today we will be doing some back testing for last week, right? So this is the website that I use, FX Replay. It's a pretty good website. I use the free version. You can pay for whatever version that you want, but free version is good enough. Let's get started. So I'm already logged in. So now I'm gonna create a session. All right, let's call it last week. We're gonna start off at 10,000. Let's find the asset that we will be trading. We will be trading the gold. This is optional. Last week, 15 and to today. Create. Okay, I'm gonna remove the volume here. We don't need that. Change my time from 1 minute to 15 minutes. Exit this shit off. And I'm gonna change my time to New York. Okay. And we're looking pretty good. Nice. Let's see what time is it. So because of the daylight saving time, we're gonna be started trading at 9 o'clock instead of 8 o'clock, right? So let's see. So this here is 8 o'clock, but we're not gonna take this trade until 9 o'clock. See. All right, so that trade had passed. Yeah, I don't know, my shit started lagging just now. So now we're going to the New York session. So that was the Asian session. We didn't get a trade there. This could have maybe possible be an entry for here for this sell back down, but we didn't get it, so we didn't take it. So normally I don't trade the London session. The London some of the time is like too choppy and you get a lot of fake out and a lot of wick out. So I try to avoid the London session. So I normally trade like the Asian session and the New York session. So right now I am trying to find the New York session. So last week was a bit choppy. I didn't get much trade. I think I took like 3 trades. 2 was win and 1 was a loss. All right, so right now we're at New York session. So the thing about trading the previous week, like backtesting the previous week, is that you already know the moves that happen. So like if you're backtesting it right now, you're just like sharpen up your skills. Like you know the move that already happened. So like now if you're going to enter a trade, it's going to be like pretty easy. You're gonna know if it's going to be a win or if it's going to be a loss because you took it last week. So like for this trade, we end up getting a win on this trade. So what I was looking for here, I was looking for the wave theory, right? So we have 3 cycles in the wave theory. We have the first cycle, which is this. You have from 6 o'clock, you get an initial move up, a pullback, and then a move continue going up, right? So that's, let's see. Where is that tool? All right, so I can't find that tool that I'm looking for, so I might use another one. Oh, here it is. Let's keep it on the favorite. So for the first cycle, this is what we look for, right? We look for the first wave, a pullback, and then the second wave. So this is what we normally enter on for the second wave in the first cycle. Stops there, and you try to target. Some of the time we just try to target this side here, or if market is showing us price as another area somewhere up here, then you target that, right? So that's for the first cycle. For the first cycle, you get a first wave push, a pullback, and then an entry for the second wave. Then we have the second cycle, right? For the second cycle, you're looking for sells, right? So the market is bearish. You get a move up. So now you're looking for a key area for price to reject from so you can get a sell to go back down. So this would be your entry. So this would be the first wave and then the second wave. So in this case, you would not get a pullback just like this, but I'm gonna show you in a bit. Shorts. So your entry would be here, stop loss would be there, and you'll be taking profit somewhere down here, right? So in this second cycle, you tend to get a pullback here, right? And then a continuation down. But it depending on the time you get this pullback, then you would know if you would be entering in that trade. And then you would have your entry here, your stop loss there, and to take your profit somewhere down here. As I said, we would normally target here for this. You would normally try to target this area. Some of the time price would show you that, hey, it's going further than there, then you can target further, right? And then now we have the third cycle. This is when price is fully bearish or fully bullish, right? So you got a first wave push, a correction, or a range. So you wouldn't get a full pullback all the way. You get like a range, and then the second wave, right? So now you're looking for your entry right here, right? So practically you're looking for a breakout entry right here, your stops down somewhere down here, then you'd be targeting up in that area. So this is what we trade in the wave theory, right? The cycles. So we have the first cycle or cycle 1, you have the second cycle or cycle 2, and then you have the third cycle or the third cycle 3, right? So this is what we're looking for. Okay, so let's delete all of this. Okay, so right now we're at 8 o'clock, right? As I said, we end up catching this move from here to here. So we're going to demonstrate it right now. Normally, I would use a buy stop order. So we're going to go one contract. Doesn't matter, we're going to adjust it and save. So normally when I'm entering a trade, I like my position to be sitting above this wick. Some of the time I would go like a pip or a tick above, so I'm not like literally sitting right on it. And then your stops would be like below this wick. Some of the time you can't keep it too close to the wick because then you'd get liquidated, price would come down, liquidate you, and then continue going in your direction. And then you'd be saying, hey, I was right. So now we're going to trade candle by candle. Let's see. Yes, Azure? Yes, you can. What's up? Okay. You know I'm in a class, right? You want to give me a minute and then I come and assist you? Almost got it. All right, here you go.
Thank you.
You're welcome. Okay, so back to what I was saying, right? So as I said, we end up being profitable on this trade. I think I took profit somewhere here. I didn't hold it for that full move and then I close it out. Some of the time, what you can do, you can like take 50, right? So you can take like 75%, 100%, whichever you want to do. So for this trade, I'm gonna take my full 100% and leave. So you can take like 75%, 50%, put your stops at break even and let the rest run. And that's how you like capitalize on your move. Okay, save. And now we're gonna skip it out to Asian session. So my trading time is normally from 8 a.m. to 11 a.m. and then I'm done. If I don't get a trade within that time span, I'm done regardless. And in the Asian session, my trading time are normally from 8 p.m. to 11 p.m. But because of the daylight saving time, I have to start trading at 9 until the other countries change their time also. So let's see. We're going to 9 p.m. And that 9 p.m. would be 21. So this is where we normally trade at, but as I said, because of the daylight saving time, we gotta move to 21. All right, so this is it, right? So this, okay, yes, I remember perfectly now. So this trade, I took this trade, like, so my entry was right here, my stop loss was here, and it was a loss for me, all right? Let's see what the 30-minute is saying. Yes, most definitely. So my entry was here, my stop loss was here. See, I got liquidated as I was explaining early on about here. They could have like liquidated us with this, then continue going up, but they didn't do that. They just go up instead. So I ended up getting liquidated on this position. So this was a loss for me at that time. But now let's see, right? And now we didn't enter in the trade. We didn't get a trade now. All right, so following the strategy, this was a perfect setup. I didn't wait until that candle was closed, but maybe that's the reason why I ended up losing that trade. But let's see. All right, so now we're going to New York. Let's see. But as I said, that previous week was a bit choppy. So how I look at the market is that, so there's always gonna be moves, right? So there's no need to rush a move. It's just that like last week was a test to see how best you can keep your profits, right? Because like for the past few weeks I've been like profitable, I've been like withdrawing from the market, and then like last week was a bit of a rough patch. So the market would test you to see how best you can keep your profits. Because if I was like trying to search for trades, trying to scope, look if I can find a trade, then I would end the week with a big red P&L. Okay, let's see. 6 o'clock. So this is Tuesday. All right, so 8 o'clock, right? So let's see. So if you're thinking of the wave theory now, right? So basically what had happened was we got an initial move here, a pullback, and then if you're working based off that previous strategy, that trade that we took, then you'd be looking for a buy above here, right? But let's see what the 30-minute is looking like. Yeah, looking pretty good. I don't think I took this trade on Tuesday. I don't know why I didn't. Maybe because the price was sitting right below here. Maybe that's the reason why I didn't take the trade. But then you have another rejection here. So right now we're going to take the trade and let's see how it plays out. But as I said, Tuesday I didn't take this trade. So wave theory, first wave, pull back, and then now we're looking for the second wave. Second wave entry should be right above this wick, and then your stop loss normally should be below here. But by the time price breaks above here, you can put your stop below that current candle wick. So let's see. Place an order, buy stop 1, save, and now we're going to pull. Okay, as I said, I like to not have it sitting on the wick. Some of the time I'll put it a little bit higher, but let's see how this one plays out. Okay, so that's the other thing also, right? Now we got a win off this trade, but normally when I'm trading, if I don't get that initial pullback from this candle, if it doesn't have the weight down here, I would not be in this trade, right? So like now it's saying that we won that trade, but like in a live market and a back testing market is like two totally different things, right? So now we won that trade. Maybe in that back testing market, maybe in that live market, we would not be in this trade because of this pullback. We would have need this pullback here first to know where we're going to put our stop. Because if we don't get this pullback, then your stop is going to have to be all the way down here. And now you'd be risking what? This move was like $900. You'd be risking $900, right? And if you don't have like $10,000 in your account, then you cannot be risking like $900 on this move. So we're going to take the win for now. But as I said, in a live market, we may not be in this trade here. So let's see. All right, so let's see the 30-minute. All right, so we kind of tap into this area. Basically, you can see the market is bearish. From here, you can see the market is bearish. Okay, so now we can look for a sell, right? So this trade that we would be taking here, all right, so this trade here was the first cycle, right? So you get a first wave, pullback, second wave, right? Finish. So now if you're continuously trading the first cycle, you're going first wave, pullback, second wave, then you'd start over, right? First wave, pullback, second wave, right? Let's do that over to make sure that you're following, right? First wave, pullback, second wave, right? And this would be your entry, stop loss below here, right? Then we're looking for another first cycle trade, right? So now you're saying first wave, pullback, second wave, right? But now we're at a major zone. Like here, you can see we tap here, 30 minutes, tap here, tap here. Well, it doesn't fully like tap all the way there, but now we would approach it with caution, right? So entry would be like right below here. Right now we're trading the second cycle. By the way, one trade per session, you good. So if you would take this trade and you made money off it, you close your laptop down and you're done for the day, right? But if you didn't take this trade, you're still fully in tune with the market, and then you'd be okay, then I'm looking for this trade now. But from once you take this trade, you're not all the way in tune again, because right, you just made some money and you be like, okay, then I'm the king now. And then you're gonna be like, okay, I'm gonna take this also. But there are some smaller stuff that you're not gonna spot to be like, okay, this is not a good trade to take. But if you didn't take this, you'd be fully in tune to say, okay, then I can see everything. This is not a good trade to take. I'm not gonna take it. Or okay, then this is still a good trade. I'm gonna take it. So we're gonna take this one and see how it plays out. We're gonna go sell stop for one contract. Drop this below the 500, so we go 400, save, and now we're gonna pull this right below the wick. Okay, and now we're just gonna watch it and see what happened. All right, so right now you notice you didn't get a wick right here, right? You didn't get a pullback for here. So normally what would happen is that, so since you're down and you're down in profits, so since you're in profits already, right now we would close this out, right? Because you didn't get this wick here, price is definitely gonna pull back for here. So this, we just created liquidity here. Anytime you see these, those are liquidity areas. Price move from liquidity to liquidity, right? So right now we're going down to sweep this, but we might come back to sweep this first before we sweep this, right? And it doesn't make sense. You're up in profits already, and then you're gonna leave it to see where price is going, right? So back to the first cycle, wave up, first wave, pull back, second wave, right? And now you're saying first wave, pull back. You don't know how far this pullback is going to be. It can come all the way down here, and you don't know if this is changing to the second cycle, right? So you made some money there, you take it, you leave. Next. All right, so see, we come back, we sweep this one first, and it continues. So this, we were still in that first cycle, right? So you go first wave, pull back, second wave. Entry here, take profits, right? First wave, pull back, second wave, right? But we didn't get a confirmation here to enter the trade. Like normally you would try to enter it off here, but even if you did enter it off here with your stops below here, you still would have been in profits. So if you had entered here with your stops here, you still would have made some money off it, right? But there's no need to be chasing the market like that. As I said, you got one trade. It was a profitable trade. You're done for the day. And if you didn't get this trade, now you get this trade. But and again, as I said, this had no wick. This had no wick. So maybe we still wouldn't have been in this trade here, right? So yes, that's what had happened for me on Tuesday. The reason why I didn't take any trade here. I just call it a day, close my laptop. I didn't make any money, I didn't lose any money. So technically that's still a win. So right now we're at 9:30. Technically we haven't got an actual trade as yet. So we're gonna call it a day and move on to the next. So this came back down here and sweep this liquidity. As I said, we swept this liquidity first, then we come back and did this one after. So now we're going to Asian session. Wow. I actually thought this video was gonna be like a 15-minute video. And right now we're just on the second day and we're up almost 30 minutes. Oh my god. Okay, 20, and as I said, we're going 21 until the other country change their daylight saving time. 21, right. Okay, let's see. 30 minutes. Let's actually draw up our zone. Normally, how I normally draw my zone, I use here, right? So we had a lot of rejection here. We broke out, and from once we stay above here, we're bullish. We're bullish until we hit here. So you can some of the time you can use here or you can use here, but right now I'm gonna use here because like anything above this for me is buys, right? Anything top here, I'm looking for sell to come back down to this here. So right now I'm trading from zone to zone, right? So the rule of the game is you buy low, which is here, you buy low, and then you sell high, right? So we normally use these lines to tell us what is low and what is high, right? Because that's how the market move, meaning like everyone low is not the same. So this might be our low right now, what we're looking for, and then this might be someone else low, right? But how we're going to tell if this is our new low is if price came like this, price is here, price breakout, and then tap back here. So that is our new low. So now we would be looking for buys here until price broke back in, retest, and then go down. Then that would be our new high again. So currently right now in the market, this is our high and this is our low, right? So let's see. Nice, 15. All right, so 30 broke back down. So right now, this is currently our new high and this is currently our new low. You can put it here or you can put it here, but it doesn't make sense. You put it here and you're looking for sells to tap back down in here. Some of the time that move doesn't really worth anything. Let's see. Yes, so this is 400, right? Even though it's saying 4,000, this is like 400 pip. That's a lot, but we're gonna keep it here. And then we wait 15. All right, so we tap here, right? So now let's see. So right now, if we can kind of like put the wave theory into here, seeing like if we get a buy above here, but the thing is we're like too close to this zone, right? So we're gonna let it go. This is a breakout. What time is this? 22. That's like 10:45. 10:45. The next 15-minute candle would be like 11 o'clock. So I'm gonna let this pass. Then now we're gonna move to New York. Yeah, I remember this day. Price had dropped so low. So I think this day I did not get a trade. As I said, I only took 3 trades for the week. So you can just imagine how many trades I had let pass. So we're here. 30 minutes. Sorry. So I normally drop my zones on the 30 minute. Like when I'm in the live market, I use like the 15 minute, the 30 minute, the 1 hour, and the 4 hour. I rarely use the daily, but unless I'm looking for a swing trade where I can enter it on the 15 and hold it for the day. I only do that like once per month. So Oh, fucking crap. I end up skipping out a 30-minute candle, but no problem. So now, if you're going to look for a buy here, all right, so you have to think like the big boys, right? So you have to think like the big boys and think like the retail traders, right? So you don't want to follow the retail traders. You want to try and follow the bigger boys, right? So most of the retail traders are saying, "Hey, prices dropping so far. I'm gonna look for a buy," right? Because that's how I used to trade, and I would lose like a ton of money. And then I would be like, "Oh, I'm gonna buy here." And then price drop low. "Oh, I'm gonna buy here." And then and then that would wipe my entire account out. So since price is dropping like this, right now you're looking for sells, right? But you cannot take a sell here because the move already happened. So now you need like a pullback and then like a 15-minute candle closing in your direction to say, okay, then now we would be trading the first wave, right? So the first wave would be like initial push, pullback, and then the second wave. And as I said, you'd be entering here. But until you get that, you will not be taking a trade. Also, you could be looking for the second cycle, right? Which is price move down, hit a major area, then you'll be looking for it to go all the way back up, right? But until you get like until here you get like a support, you cannot do anything. So let's skip it out and see. See? Most people buying here lose. So now we got a support here, but let's see what happened. Price continue going down. As I said, no wick or pullback here, so we would not be in a trade here. What time is this? 10 o'clock. Let's see. So right now price is in a range here. So if we can get a breakout above here, then we can look for buys. If we can get a breakout down here, then we can look for sells, right? What time is this? 10:30. Let's see. And this is level o'clock, so we're done for the day. So now we're gonna skip to Asian. 21. Come on. But there are some days where like you get like 3 entry per session, right? And those are some 3 solid entry. Like whenever I see my setup, I take it no matter what. I take it and I let my trade play out, right? So if it's a loss, it's a loss. If it's a win, it's a win. Regardless, it doesn't matter to me, right? I'm just trading my setup, and while I trade my setup, then profits come. Yeah. So it's a win-win. All right, so basically what I notice is that like the market has its phase, right? So at one point in the market, you'd be getting like a lot of fake out here, and you can enter there, or a breakout here. Like 1 week straight fake out here, and you get your entries. So the market would cater for all type of traders, right? And in that case, it doesn't matter what strategy you're trading from. Once you know how to manage your risk, you will always be profitable, right? So for 1 week, the market would be catering for all the fake outs. And then for that week, if you trade fake out, you're totally profitable, right? And then another week, price would be catering for all the breakouts traders. So price breakout and you enter like all breakouts you be getting, all right? And if you trade breakouts, you're profitable. Then price would be catering for all liquidity traders, people who trade liquidity, look for liquidity errors, liquidity sweep. Like, so in my opinion, I think this week that we're currently trading backtesting here is liquidity week, right? You see on a trade that I showed you that we got liquidated on it. Yes. So like here, we did a liquidity sweep, but no, we're not gonna take a trade just because we got a liquidity sweep. We need our trading setup, right? Because I don't trade off of liquidity. What time was this? This was Wednesday, Asian, yes. So here we were looking for buys, right? We did got the buy, and it was a very sweet piece of buy. Right? So this is our range. It's a very tight range. So since you have such a tight range, you're trying not to trade in that range. You want to break out above here, right? So break out below here, you sell. Break out above here, you buy, right? So what we were looking at the third cycle, right? So anything above, what I was saying is that I only had one line here, by the way. No, it doesn't matter. But at that time, I only had one line here. Anything above here, we're still looking for buys. Anything below here, we're looking for sells, right? So this was what we were looking for. Right? But our trade would be taken somewhere here with our stop loss down here. So it wouldn't matter. We wouldn't look for this pullback here. If we get it, it's good. But we would be like in a drawdown, like if we take the trade here. Pullback, drawdown. No problem. A little drawdown won't hurt. So this is called the third cycle, right? Where price is like totally bullish. So price was totally bullish above this area until we get like a 30-minute close below here. Then we can say, hey, we're looking for sells. All right. All right. So on a 15-minute candle, we got that breakout, right? So now I'm gonna just place a buy order. We could have like still do the buy stop order, but I'm gonna just go with a buy order, right? Then next, right? So for this trade, I don't remember where I took profits. I think I took profits right here. Yes, yes. So what had happened was, as soon as price hit this area, my stop was at break even. So if price hit here and then came back and stopped me out, I would have not lose a trade. But I took profits like around here, so I didn't wait for this entire move. I took profits like here, right? So because we're trading by the candle, we had to wait on it to close. So this was like a breakout in that third cycle, right? This is one of my sweetest setup, right? Where you got price ranging or range by the candle, especially for here, right here. Just look at this right here. This right here is my favorite setup, right? So we have price range here, broke down, and then this broke back out. So even if price had broke just a little bit above here, I would have still been in that trade. I wouldn't wait for it to close above here. From once I close above this, I'm good, right? So if I take it above this and I get that loss, I'll be out. And so see, we got that wick pullback as we were talking about. So what had happened was I took this trade without this, right? So price had came up first. I had entered it and I knew it was going to pull back either way, but I didn't care where it want to go because I was willing to put my stop loss below here, right? So it was still good. And that was a sweet piece of trade. I think this was the last trade I took for the week. Yes. As I said, it was 2 trade, 2 wins, 1 loss. So it was on Sunday night. I took that win over there that we just no, it was Monday morning. Monday morning, New York. We took that window over there. It was profitable. Then Tuesday night, or is it Monday night? One of the nights I took another trade and we got liquidated. I showed you that trade. We got liquidated. And then this was the other trade that we took. Totally profitable. Everyone with me who took this trade, they were profitable. And then we end up calling it a week. Even though we call it a week, we were still watching the market. But because that's the thing, you got to be consistent with the market, be up to date with the market, see what is going on. Even though you're not taking a trade, it's best to sit on your hands and watch the market. All right. So now we're going to New York. As I said, we don't trade London. I had back tested London for some times and it wasn't profitable for me. So I just avoid London as best as possible. But as you see, the market, like this week, it was a lot of sells. I was not anticipating so many sells. I was mainly looking for buys. I was open to for price to give me a nice setup for a buy, and then I would hold it for a period of time. But based on how I saw it was going, I just take my profits and leave. Okay, 7. As I said, we had called it a week already, but right now we're gonna see if we still get any trades. Okay, 8:15. So now we need like a support or so. I'm not gonna bother draw any line or anything like that. I'm gonna just use my imaginary line, like my friend did. She has an imaginary line. So okay, so right now we got a support here. Like here, you'd have to look all the way over here if you got a major error there. If you had a major error there, then you'd be taking buys. If not, you leave. But I can't bother to go back and check. So let's wait. And even if you did, your entry would be here. You would not be in that trade. Your entry would be have to be up here. So all right, so this trade, this was Thursday. So this is one of my setups also, right? As I said, we call it a week. I didn't enter any trade, but now let's just see, right? My entry is going to be above here, and your stops is going to be here, right? So, or your entry above here, price reach an area like here, your stops go to break even, but price top like here, then you'd put it under the current wick, because if price hit break this wick and then come back down, bro, you're out. There's no need holding that trade. So let's see. Let's see. Place an order, buy stop. 1. Put this at 900. Save. So now I'll pull my entry above here. Wait, what time was this? So 9:15, 30. Okay. But some of the time, like, you can just put your entry above here. It depends. You look how much from here to here. And if from here to here is like around, say for instance, you're risking like $100, right? If you enter this trade here and your stop loss is here, that's at $100, right? And you'll be looking to make $100 somewhere up here, right? And from here to here is like around $20. It does make sense. You're gonna put your entry here because you're trying to make an extra 20 bucks. Now I would put my entry above here, right? So I would rather to lose an extra 20 bucks than to enter this trade without hit tapping here and then losing that 100 bucks. But let's see how it plays out. See what I'm talking about? So right now we would be in this trade, we would be in a drawdown. As I said, our stops would be here. So unless price hit here, you would not be losing your $100. Okay, that's look pretty good. So this trade, I did not take this trade, but the reason why I would take this trade was because of my favorite setup right here, right? But then I would have my entry here. I would not have my entry here because right now I would be panicking, right? If I had my entry here, I would be panicking because price pulled back all the way down here. Even though my stops is here, risking like $100, I would be down like 80 bucks. And then I would be like, oh damn it, man. Like I should close now because that's the thing. Like while you're trading, there's so many thoughts going through your mind. So many thoughts. You should close. Save yourself $20, right? Bro, you enter your trade here. If you enter your trade here and you're in the drawdown, you keep your stops there. If it hit it, it hit it. It is what it is. You cannot control every single thing you do in the market. You just trade your setup and let it play out, right? So as I said, take a screenshot of this here, all of this right here, price here, create a resistance, boom. create a resistance here. All right, first we create a support here. We broke that support, create a resistance here. Bam, then we came back, and then we close above here. Bro, this is my favorite setup. So what I want to start doing at some point, like, so right now I have a standard amount that I trade, regardless if it's one of my favorite setup or a setup that's I still trade the same amount. So what I'm trying to get to the point where like a trade like this, I would like add more position to it, right? So close this. But as I said, the only reason why I had my entry here was because like when you check it from here to here, you're risking like that's $10 extra, right? So if you had entered your trade here, price goes up there, then you okay. So think about it. I put my entry here, you put your entry here, right? So price goes up, I made $100, and you entered from here, you made $110. So when you look at it, you made $10 extra, right? So my entry was here. I was in no sweat until price came back and hit my entry, right? While you did a lot of brain exercise thinking, hey, should I close my trade? What should I do? And start panicking for $10 extra. If you get my point, right? So now we're going to skip this day, go to Friday. See what Friday is like. No, we're going to Asian first, and then we go to Friday. So like now we're going to for us this would be Thursday night in the market, and for the Asian session that would be Friday night in the market. So for me, on Friday I do not pressure the market, right? I let the market do its thing. Because that's the thing, like you cannot win every trade in the market. There is gonna be loss, right? But is it an unnecessary loss? That's what you want to avoid. So right now we got liquidation happen here. See that wick? We liquidated here, then we liquidated there. So now let's see what's going on. Now let's get our lines. As I said, right now you see that we're winning every trade right now, right? But last week it was not like that. We took only 3 trades. We got liquidated on one. Price still went in our favor, but we got liquidated first, right? So we end up supplying the market with money for it to move. All right, so let's see. Because like that's the thing, like trading in the live market and doing like a back testing is literally the same thing, but in the live market you have a lot more emotions, right? Because you're thinking, hey, I don't want to lose, I don't want to do this, I don't want to do that. But like from once you eliminate that emotions, you good. You making crazy bag. All right, so as I said, we did not take any more trades, and even if we were going to, this would not be a trade that we take. So price is above here, you'd like to see price pull back, then you get more buys, but right now we're bullish to this point. All right, so right now if you really want to trade, you could take a trade above here, because like if we're trading wave theory, we're saying price is bullish, we got a pull back, now we're looking for the second wave, so your entry would be above here, right? So let's see, place an order, buy stop 1, change this to 400, save. All right, so as I said, I like my entry a little bit, oh yes, I like my entry a little bit above, not like literally sitting on it, because some of the time, like it depends on the broker that you're using, price would come right here, but you're in the trade, right? And it didn't hit here because of the spreads. So you create that gap, that space. So even if price hit here, your trade doesn't get activated and then pull back all the way on you, right? So let's see how this plays out. So right now we're in that trade. Let's see. Still in. Fortunately, it was profitable. But if you're in this trade, as I said, you enter here, your stops is going to be below here. So there's no need to sweat. If is price going to play out or not? It doesn't matter. Now I'm gonna close it. We don't care what price wanna do after because price stop here. Well, even if you don't need to close it, price stop here, you're gonna put your stops at break even because like anything can happen. And if you did hold it, you're making crazy food, but we don't care about that. Okay. So now we're going to New York. As I said, one trade per session, brother. One trade per session, and you good. They normally say one trade per day. It's the same thing. Like if you only trade Asian session, one trade per day. If you only trade New York session, one trade per day. You can get one or two trades. Like say you enter your first trade, it was a loss, and you see a nice setup for the second trade. Yeah, you can take your second, but you don't need to be placed in over 3 trades for the day. It doesn't matter. And even if you're trading on a small account, you're gonna be like, hey, I'm only risking $2, so I can take 10 trades. No, man. Like, even if you're only risking $1, you only take 1 trade. That's up to you, bro, if you want to risk $1 or not. But do not take over 2 trades for the day or for the session. All right? Because like that's how the brain is wired. Like even if you're saying you're only risking $2, don't. Because like each time you do that, it tends to turn into an habit, right? So if you want to do something or if you want to be great at something, you do it a little by little, little by little, right? So if you want to be disciplined and consistency, you do it a little by little, a little by little. If you want to break your trading plan and stop being profitable, you trade 5 trade for the day, then you trade 6, then you trade 7. You're doing it a little by little, then that's gonna break your plan, right? You don't want that. You want money. We're all in this game to make money. At the end of the day, not everyone is gonna be able to make money. Because right, if I make money, how are you gonna make money? If you make money, how am I gonna make money? We all cannot make money, right? And that's the craziest part of the game. Not everyone wins. Okay, let's see. So right now we're at 8 o'clock. This is Friday. Remember, Friday, you approach the market with caution, right? All right, so now as I told you, market move from liquidity to liquidity, right? So we have an area here, price had tap into, but on the 30-minute, yeah, you can still see it. It's not anything as clear here, but it's kind of somewhat of an area. So price had tap into this area, so now you're looking for price to take this liquidity, right? That's all you're looking for. Because even if you're trading wave theory, price move up, you're looking for a pullback for the price move again, right? We don't know which way price is going right now. Price is, you can see price is bearish, but even if price is bearish, like you can look for sells here or you can look for sells here, right? Here is a more comfortable area to take sells than here, but you can still take it here only if you get your confirmation. All right, so right now you can take a trade off the second cycle, price move up, tap a target, and then shoot off, right? But we don't know, right? This could very well even be the first cycle where price go up, pull back, and then continues to go up. But how to determine to know which cycle that you're trading? You normally watch the trend of the market, right? If you notice from week, price has been bearish, right? Sells, so many sells, right? So many sells, right? So price has been bearish from week, so right? So you normally try to trade the trend, right? So now you're looking for sells. You can take the sell here to top here, up to you, or you can wait, right? So for now, I'ma just wait. All right, so that end up plays out. Bam, tap here, tap down into that area, and then you're done. But let's see. So as I said, price is bearish, but if you want, you could get an entry above here to see where price is going, right? As I said, instead of putting your entry above this one, you would put it above this one. So you save yourself that headache. And see, price did not go anywhere there. Price just dropped. And we are done for the day, right? So right now, what I'm doing, I'm building a course on wave theory, and I'll be uploading those videos, right? So only videos I'll be doing on by myself is the video with the strategy, right? So everything explaining about psychology, trade management, and risk management, those would be AI videos. I don't have any time to be sitting creating those videos, or I'll tag other previous videos in it, whichever. But this is the only type of videos I'll be creating, because you can't get AI to create a video like this with your strategy to make it foolproof, right? So I'll be creating those videos, uploading them to my YouTube. You guys, you can watch it, check it out. I'm not asking for any money or anything like that. It doesn't really matter to me. The market has been so great, providing me with enough, and now I'm just trying to help others, right? So I also created an app. It's called Astro Journal. You can use it to like journal your trades. Let me see if I can find it too. Where is it pictured? Da-da-da-da-da. Yeah, I don't. Next up. I don't remember where that is. New folder. Okay, yes, found it. So this is it, right? This is my app, Astro Journal. You use it right now. It's a one-time purchase. It's for $29.99, $30, right? So you use this to like journal your trades, so you can keep track of what you're doing, right? If you don't journal your trade, you will not be profitable. I'm telling you, brother. So you don't even have to get this. You can even get Tradezilla or whichever journaling, but those are like $150, $200 a month, and you're saving yourself a lot of money here, right? You're saving yourself a lot of money by just making a one-time purchase. This is a mobile app, by the way, right? You can find it on the Apple Store. The next thing I want to do is that I want to get it on the Google Play Store, but majority of people right now, they're using iPhones. So for now, this is on the Apple Store, right? You can use it to like calculate your position, to know where you where you should put your stop and how much you'll be risking, right? And then this will start plotting your graph, telling you how many telling your win rate overall and your win rate for the day, right? And then it would show you various trades that you're in, and then it would like consolidate all the pairs. Like if you're taking euro versus USD trades, you're taking gold trades, you're taking AUD trades, what it's going to do is going to show you which pair you're most profitable on, right? And then after a period of time of trading, then you'll be like, okay, then I'm most profitable on gold. And then Euro USD is what taking back that money. Then okay, I should just only trade gold. I'm gonna take out Euro USD and I'm gonna just trade gold. Then you know where your money is going, because when you're at the stage at like break even, Like you're making money, you're losing money, you're making money, you're losing money. Then you have to analyze your trades and see where you're losing that money, right? So I created this for the younger generation who is just starting to like learn trading and so it's like profit, it's very cheap for you to use. And as I said, it's a one-time payment. After you make this payment, you're done. And that app is for you forever, right? And then it will show you your stat for the month, what's your win rate for the month, how many trades you took for the month, how much you made for that month, and then you go to the next month. And also you can even download your trades. You can download your trades and you can send them to a friend or you can send them to an investor, whoever it is, right? So so we did 1 hour. As I said, I wasn't planning on staying for an hour, right? I'm not that much of a talkative person. I don't do much talking. So wow, that's a lot. So we're gonna end it saying stay positive guys, stay focused, stay consistent, and most definitely stay disciplined. That's how you become profitable.